Welcome everyone. Today we are diving into a sector that is quietly shaping up to be one of the most asymmetric investment plays of 2026. If you've been watching the precious metals market, you know we are living through a historic structural shift. As of June 1, 2026, the physical silver market is entering its sixth consecutive year of structural supply deficits. We've seen a staggering 762 million ounces pulled from global stockpiles since 2021. To put that into perspective, that is roughly an entire year of global mine production completely gone. At the same time, we are witnessing a global sovereign scramble for critical minerals. Governments are treating industrial metals like tungsten, zinc, and lead as national security priorities. Canada has signed over 20 critical mineral agreements this year alone, while the US has committed $12 billion to Project Vault, its first strategic minerals reserve. Because most silver is produced as a byproduct of zinc, lead, and copper mining, capital is rapidly rotating into high-grade polymetallic deposits that host silver alongside these critical metals. In fact, Bank of America's metals team recently projected that if physical shortages deepen, silver could trade in a range from $135 to $309 per ounce. Now let's talk about the price action. It has been a wild ride in 2026. Back in January, silver marked a historic milestone, breaking through its long-standing $50 resistance zone and climbing to an all-time high of $121.64 per troy ounce. Gold similarly peaked on January 28th at approximately $5,589 per ounce. Following those record peaks, a combination of profit-taking, a strengthening petrodollar, and a hawkish Fed, which effectively priced out 2026 rate cuts, triggered a sharp 40% sector-wide correction, dragging silver down to near $60 per ounce in the spring. But the physical floor has held firmly. As of May 9, 2026, spot silver has staged a powerful technical rebound, recovering to $79.92 per ounce, while parallel silver futures have climbed past $80.60. The gold-to-silver ratio is currently consolidating in a historically balanced range of 61 to 62 to 1. This brings us to the famous melt-up thesis. Legendary contrarian macro strategist David Hunter of Contrarian Macro Advisors has issued a parabolic forecast. He believes global markets are entering a spectacular final melt-up phase heading into this summer, with the S&P potentially reaching 9,500 before giving way to a historic deflationary bust. In this impending blow-off top, Hunter has established aggressive targets: physical gold reaching $6,800 per ounce and physical silver hitting $180 near term. Most excitingly for equity investors, Hunter targets the junior gold miners ETF, the GDXJ, to hit $250, and the junior silver miners ETF, the SILJ, to reach $90 this summer. With the SILJ currently trading around $31.62, this implies a massive 185% upside potential for junior silver equities from their current consolidation levels. Let's break down the 11 silver contenders positioned directly at the center of this move. Company 1, Orex Minerals Inc. First up is Orex Minerals, trading on the TSX Venture under the ticker REX and on the OTCQB as ORMNF. As of May 9th, the stock is trading at 21 cents Canadian with a market cap of $14.3 million. Orex operates on a low-burn hybrid model, combining direct project ownership with strategic joint ventures and equity partnerships. On May 4, 2026, Orex completed a transformative corporate transaction, closing the sale of its non-core Coneto silver-gold project in Durango, Mexico, to Silver Viper Minerals Corp. Orex and its partner, Fresnillo, sold 100% of Coneto to Silver Viper for an all-share consideration valued at $15 million, which is over 20 million Canadian. This Coneto divestment is a massive strategic milestone. It monetizes a non-core asset while keeping liquid equity exposure to Conato's exploration upside. More importantly, it allows management to sharpen its focus on its core Sandra Silver Gold project in Durango, in partnership with Pan American Silver and the Jumping Josephine Gold project in British Columbia. Orex's anchor Sandra project hosts the Baleares Silver Deposit, which carries an inferred mineral resource of 33.3 million ounces of silver. Crucially, Orex retains a 1.2% net smelter return royalty on Baleares. They also hold a 2% NSR royalty on the Basel Gold project in Sweden, which hosts over 2 million ounces of gold. At a $14 million market cap, Orex is a highly de-risked, asset-backed option on silver and gold. Company 2, Equity Metals Corporation. Next, we have Equity Metals Corporation, trading under EQTY in Canada and EQMEF in the US. The stock is currently trading at 33 cents Canadian with a market cap of $80.13 million. Equity Metals has emerged as a technical favorite, showing buy signals from both short and long-term moving averages and a MACD buy signal. Following a pivot bottom, the stock has risen nearly 55% and is considered a strong buy candidate. The company is the 100% operator of its flagship Silver Queen project in British Columbia. Crucially, the property is wholly owned with no underlying option payments and no royalty burdens. Silver Queen hosts an impressive indicated resource of 62.8 million ounces of silver equivalent, grading a massive 565 grams per ton equivalent, plus 22.5 million ounces in the inferred category. Adding to their momentum, on March 11, 2026, Equity Metals announced the discovery of high-grade gold mineralization at its adjacent Arlington project. They've also engaged Research Capital Corporation as a financial advisor to optimize their capital structure ahead of their upcoming resource update. With finding costs averaging an incredibly low 15 cents Canadian per silver equivalent ounce, Equity Metals is a premium high-grade developer. Moving on to Decade Resources, trading under DEC on the TSX Venture, it is currently trading at 8 cents Canadian, with a market cap of around 18 to 24 million. Decade is a highly leveraged explorer focused on high-grade gold, copper, and silver systems in British Columbia's legendary Golden Triangle. In April 2026, Decade outlined an active exploration campaign. At their Bonaparte property, the province of British Columbia recently granted them ownership of a new 1,180-hectare mineral claim covering the eastern extension of a chalcopyrite-bearing quartz diorite system. Decade is planning a minimum 3,000-meter diamond drilling program to test deep anomalies starting at 300 meters depth. They are also starting exploration on the Nobody Knows claim, where they already have a drill permit in place. Meanwhile, at Del Norte, they are sampling new breccia zones exposed by melting snow and ice. Following the termination of their deal to sell a 65% interest in the Red Cliff project to Mabel Ventures, Decade retains 100% of the upside on an asset that historically mined grades averaging 101 grams per ton silver. Now let's talk about Honey Badger Silver, trading under TUF on the TSX Venture and HBEIF in the US. The stock has experienced a massive corporate re-rating, currently trading at 66 cents Canadian with a market cap of $88.39 million. On April 27, 2026, Honey Badger closed its highly anticipated transformative acquisition of Canadian Zinc Corporation, giving it 100% ownership of the Prairie Creek or PC Silver project in the Northwest Territories. This is an absolute game changer. Prairie Creek is one of the highest grade undeveloped silver-zinc lead projects in the world, hosting an M&I resource of 240 million ounces of silver equivalent at a spectacular average grade of 766 grams per ton equivalent. It also hosts an additional 167 million ounces equivalent in the inferred category. Prairie Creek is fully permitted with over 65 million Canadian dollars in historical underground workings, mill facilities, and road access already in place. Even more exciting, on May 6, 2026, Honey Badger announced newly recognized high-grade germanium and tungsten potential within the deposit. Since historic drilling was never assayed for germanium, they've partnered with the University of Toronto to resample core during the upcoming field season. Backed by an $11.5 million brokered financing completed in April and counting billionaire Eric Sprott as a major shareholder with a 6.74% stake, Honey Badger is an institutional-grade powerhouse. Next is Bayhorse Silver, trading as BHS on the TSX Venture and BHSIF in the US. The stock is currently trading at 5.5 cents Canadian, with a market cap of 23 million. Silver Viper issued over 25 million shares to the vendors at a deemed price of 80 cents per share. On April 29, 2026, the company successfully closed a heavily subscribed private placement, raising over 4.1 million Canadian dollars to fund mine development. On the operational side, they've extracted a 25-ton run-of-mine bulk metallurgical sample to complete the geochemical analysis required for their full operating permit. The mine's competitive edge is its state-of-the-art Steinert ore sorter, which can reject up to 85% of waste rock before milling, drastically lowering operating costs. Additionally, recent IP geophysics indicates that the vertical extent of the mineralization could extend down to 300 meters, compared to the previously known 30 meters. Bayhorse has expanded its underground drill program to 20 holes to test this massive expansion potential. Let's look at Rio Silver, trading under RYO in Canada and RYOOF in the US. The stock is currently trading at 44 cents Canadian, with a market cap of 26.89 million. Rio Silver is pursuing a low-capital direct-to-mill strategy at its Maria Norte project in central Peru, planning to truck high-grade surface ore to nearby third-party toll mills. Bayhorse is a near-term production play advancing its historic Bayhorse silver mine in Oregon. On March 31, 2026, Rio Silver closed a $3 million private placement led by billionaire Eric Sprott, who acquired a 10% undiluted equity stake in the company. On April 8th, they announced outstanding flotation recoveries from metallurgical testing, 85% silver recovery, 74% gold, and 77% lead. Crucially, the concentrates returned exceptionally low arsenic levels of around 0.3%. Because low arsenic concentrates are highly marketable in Peru for blending with complex local ores, Rio Silver's development path has been significantly de-risked. Next up is Klondike Silver, trading as KS on the TSX Venture. The stock trades at 25.5 cents Canadian with a market cap of 6.86 million. Klondike completed a 1-for-10 share consolidation in late February to streamline its capital structure for institutional funds. Under the leadership of CEO Thomas John Kennedy, the company is focused on the Slocan Silver Camp in British Columbia. Klondike's ultimate asset is its fully permitted 100-ton-per-day sand-on-flotation mill and tailings facility. In Canada's strict regulatory environment, permitting a facility like this would cost tens of millions and take years. Klondike already owns it, entirely debt-free. Their exploration is currently targeting the Silver Mile, a 9-kilometer mineralized vein structure that historically hosted 13 producing mines. Now let's look at Southern Silver Exploration, trading under SSV in Canada and SSVFF in the US. The stock is trading at 50 cents Canadian C, with its market cap consolidating at premium levels around 120 to 180 million. Southern Silver is a premier developer, and they were actually named 28th overall on the prestigious 2026 TSX Venture 50 list after a 400% market cap increase in 2025. Their flagship asset is the Cerro Las Minitas project in Durango, Mexico, which is one of the largest undeveloped silver-lead-zinc deposits in the world. On April 1, 2026, the company reported final high-grade assays from the shallow replacement-style Puro Corazon claim. Hole 221 intersected 4.6 meters, averaging 557 grams per ton silver equivalent, including a bonanza sub-interval of 1.5 meters, grading 1,181 grams per ton equivalent. These shallow, high-grade intercepts are being integrated into an updated resource estimate, which will significantly enhance the economics of their upcoming updated preliminary economic assessment. Moving to Silverstorm Mining, trading under SVRS on the TSX Venture, the company currently commands a major $430 million market cap. Silverstorm is on the verge of restarting the past-producing La Parrilla silver mine complex in Durango, Mexico. On May 7, 2026, the company officially mobilized two highly experienced Mexican mining contractors, Minpro and Mexgeo, for underground mine development. Contractor mobilization is scheduled for completion by the end of May. Meanwhile, general rehabilitation of the massive 2,000-ton-per-day La Parrilla mill has passed the 50% completion milestone, and their new on-site analytical laboratory is on track for Q2 commissioning. Funded by over $2 million in cash from a non-core royalty sale in Nevada, Silverstorm is primed for near-term production. Next is Brixton Metals, trading as BBBB on the TSX Venture with a $49 million market cap. While Brixton continues to advance its massive Thorn project in the Golden Triangle with backing from BHP, its wholly owned Langus Silver project in Ontario has delivered historically significant drill results. On March 25, 2026, Brixton reported a record-breaking native silver intercept in hole LM-26-290, which returned a mind-blowing 82,334 grams per ton silver, that is over 2,600 ounces per ton, along with 13% cobalt and 2.6% nickel over half a meter. This is the highest grade sample ever reported in the company's history and ranks among the highest silver grades ever drilled globally. With a 15,000-meter drill program ongoing at Langus to establish a maiden resource, Brixton is a massive exploration standout. Finally, we have GR Silver Mining, trading under GRSL on the TSX Venture. The company has a market cap of $330 million. GR Silver controls the Plomosas project in Sinaloa, Mexico, which hosts a massive resource of 134 million ounces of silver equivalent. They have historically added ounces at an incredibly low cost of just 17 cents Canadian per ounce equivalent. Under the interim leadership of CEO Eric Zonscherb, the company is executing a 20,000-meter drill program at San Marcial. On April 22, 2026, they reported step-out results proving high-grade mineralization extends down to 500 meters depth, including 6.45 meters, grading 498 grams per ton silver. GR Silver is fully financed with over 28 million Canadian dollars in cash and zero debt, and is currently evaluating a pilot plant at Plomosas to support bulk sample test mining and bypass standard Mexican permitting timelines. The massive correction we saw this spring has created a rare, generational entry point for junior silver equities. While spot silver has successfully found its floor and rebounded to nearly $80 an ounce, the equity valuations of these junior explorers and developers have lagged behind. This is the exact definition of a high-value dislocation. Whether you are targeting near-term cash flow through Silverstorm, massive permitted resources through Honey Badger, or globally historic exploration grades through Brixton Metals, the 11 companies detailed in this report represent the absolute vanguard of silver wealth creation. As the physical deficit continues to drain global inventories and the junior silver space looks toward David Hunter's summer targets, this window of opportunity is unlikely to remain open for long. Thank you for listening to the Silver Sovereign Report. Happy investing, and we'll see you next time. End of the video right now. Leave a comment down below. Share with us what you think about our silver miners analysis. Are you purchasing more? Are you maintaining your position strong? Or are you remaining on the sidelines? We genuinely want to hear from you. And if this video opened your eyes to what's approaching in the silver market, please hit that like button. Don't forget to subscribe and activate notifications because the financial storms ahead are only just beginning, and we'll be here to guide you through every single step of the way. See you in the next one. Stay safe, stay informed, and stay positioned for what's approaching.